Welcome back to another video. In this video, we're going to talk about what is the best stablecoin to hold for the long term. If you take a quick look at the stablecoins, we can see that Tether, of course, has the biggest market cap, and next comes USDC coin with $52 billion, and thirdly, with $17 billion BUSD. For this video, I decided to only research the first three coins. And by research, I mean that I was looking for data or evidence what they did with their money. So were they investing it, and in what were they investing it, or were they just holding cash? Okay. I also made an Excel sheet to compare all the results, just copy paste. And as you can see, of course, I have the most info for USDT and less info for BUSD and USDC. Later, I will show you how. Okay, let's get started. So what I started to do was, when you're searching info for BUSD, so you want to look at the financial report, you go to Paxos, and you go to stations. All links will be in a comment section below, description below. Sorry. And yes, they have multiple coins and we are interested in Binance BUSD. And I decided to go for the 30th of September because I could only find sufficient data for USDT and USDC for this date. So of course it would be good if I also chose the same date to compare it with. So when you click here, you will land on this site. This has about 7 pages, not very long read. You can quickly scroll over it. Not really a lot of info, but there is some useful info, like how much money they have and the reserve account. So this refers to accounts held by the company in US dollars, equivalents which include, and here they have 3 different kinds. And to be honest, I do not really understand what they're trying to say here, but yeah, these 3 are the things that they mentioned in the report, and these 3 together, summed together, equals this amount, 13 billion. I do not know how to risk these things. I don't even know how long, if they are borrowing their money or something like that, or how they're earning interest or something. So I cannot really calculate or evaluate the risk factor in the BUSD, what they're doing with their money. Okay, but not really worried because it's only 13 billion, while the rest, well, for example, Tether is 70 billion, I think, more. Okay, let's check out USDC. To find USDC, you need to go to Circle, and when you scroll below here, you can see their financial transparency. And I decided to go for the 30th of December, of course, because the other ones do not show sufficient data. What I mean, if you just open from December, you have 3 pages, while if you look for September, you have a 4th page, and this breaks down their reserves. So what they're using their capital. So yeah, that's why I decided to go for September, because I didn't have the 4th page here, and that only with this one the amount was, and here they also have the page where the amount is given, 31 billion, but they also give their allocation. Here we can see that they have 100% of their capital allocated in cash and cash equivalents. and 0% in the rest. And of course, here you see some things. What is important to note is if you do not know any of these meanings and you want to know it, just Google it, like what is certificates of deposit meaning, and then here. And for this, we are interested in what is cash and cash equivalents. If you just Google that, cash and cash equivalents, we can see there are 5 types of cash equivalents that are namely treasury bills, commercial paper, marketable securities, money markets, and short-term government bonds. I just copy paste that in my Excel sheet, these 5 things I found. One more thing, they did mention in their report here that they do not own commercial paper. And so commercial paper, this should be 0. And the rest is unknown because I do not know how much they spent on treasury bills, on securities, and short-term government bonds. And we do not know what the maturity is of those short-term government bonds. Oh, sorry, I take that back. They did set something about that. And they have the maturity date less or equal than 90 days of purchase. So when you buy something after 90 days, you can expect your money back with some interest. So that sums it up. Okay, now for the juicy part, Tether. Here I found a lot of useful information. Again, if you want to find this information, go to Tether and then go to transparency. Again, all links below. Your first thing you should be able to see is this: the current balance of everything, of USDT, Euro T, or something like that, etc. But we are interested in what they're doing with their assets. So when you click this one, because this is the latest report, you'll end up here. Scroll up. Yeah, you can read everything here. 8 pages, not very long, but we are interested in this, in their the asset breakdown. Here we can see exactly what they're invested in. So they have 30 billion in commercial paper, 7 billion in cash and bank deposits, 0 in reverse repo notes, and etc, etc, etc. And if you do not know any of these, just Google it. They do have some notes here, footnotes, what they are, etc, explanation. And yes, this all is only for the cash equivalents. All this data here, so also this and also this, I just copy pasted in my Excel sheet. Let's go there for a better overview. So again, cash and cash equivalents, this has 5 different sectors, let's say that, and this is how they allocated it. Subtotal is $58 billion is invested in this, and they also invest in other things like secured loans, corporate bonds. These are a little risky, and other investments including digital tokens. Okay, we'll go back later on this. Their commercial paper, certificates of deposit, that is 30.5 billion. And this is very big, and they decided to give us an overview how risky this part of their investment is. And that's why this is in gray. And if you just look here we can see the ratings of their investment. So they're 30 billion. We can see how much of that money is invested in which rating sector. Of course, these ratings were given when at the 30th of September. Now they could be different. So to get a better overview of the ratings, let's go back to Google, because let's assume you do not know nothing about bond ratings. This is an overview of how good the investment grade is. Of course, you want to have the highest one, AAA. Of course, there are different companies evaluating them, but these are all equal. I think we are, let's check it again. We have the highest is A1, A1 and A1, A2, A3. So I assume that it's Moody's that they that gave them the rates, and they have A1 plus, so that is between A1 and AA3. So that's okay. They have A2 and A3, and also other. By other, I assume that is everything below A3. So all these investments below that they did not share. Okay. What I saw very risky is the other investments, because I couldn't find this. It's 3.8 billion, and the other because I do not know if they have very bad a very bad investment grade here, maybe a C or a D even. So yeah, because I couldn't take that into account, so I assume a worst case scenario. It's very risky investment. Another thing that they also mentioned is the maturity. So in after how many days you can expect your money back, and 7 billion you can expect between 0 and 90 days, and 12 billion in 91 and 180 days, etc. And so I decided for the total risks or these two factors. So the other investments, because I didn't know if they're what the digital tokens are they buying meme coins or something like that? I don't know, or ICOs. Yeah, maybe I should have considered this one, corporate bonds, because those can become risky, and we do not know what the grade is of the corporate bonds, and of course also the security loans. But let's assume that they're not so risky. Let's only assume the other investments and lower grade bonds. Then we can calculate how much percent of the portfolio is very risky, and it's approximate 6.26%. Yeah, that sums it up. Next, I also decided to create some graphs to get a better overview, so that, for example, I said previously that this one's the biggest, and we can see that is the subtotal. So the cash equivalence is the subtotal here, and that is very big compared to these three. As here, the cash equivalent. So we're looking at this separately, cash equivalents. Then we can see that the commercial paper here now is the biggest, and that is 53% of the 58 billion. Next, the ratings. We can see that the lowest rating, so the other, that is 2%. And the highest two are 46 and 48%. And finally, the maturity, we can see this is not almost evenly spread, but yeah, it's spread. It's not that one is very much amount of days. Yeah, that is 30 billion. I assume that these ones you can very quickly get your money, and meaning that you can easily sell your bonds maybe for a little discount to get your money, or just wait until maturity. So this one looks pretty healthy compared to this one. Compared to the other three, because you do not know the secured loans. I do not know if you can just claim your loan. I don't think so, and I would assume as long as nobody claims their no if no not if how do I say this? If more than $58 billion is claimed, so if customers suddenly lost trust and everyone together banded together and wanted out and decided to cash out their USDT for US dollars, if the amount is more than $58 billion, then Tether would be in big trouble, I think. Big trouble, because they were 70 billion or 69 billion, and they cannot get the cash fast enough. Okay, hope I make my point clear. Comparison, of course. Lastly, we can see that these are the numbers that I took on the 15th of February. And we can see that Tether still has a market dominance of 43%, and USDC has 29%, and BUSD has only 10%, and the rest is far behind. That totals 18%. So yeah, that's it. I couldn't really get a better overview from USDC and BUSD. I do know that USDC only has cash equivalents because I almost forgot to show this. This is one of their blocks, and they show that Paxos stablecoins USDP and BUSD reserves has 100% in cash and cash equivalents, and cash equivalents are these things here. And of course, you do need to know what you're buying and the bond grade, etc., and that we do not know. They have not been very transparent about that, while Tether has been. In my yeah, in my personal opinion, is I would invest in both Tether and USDC, or better said, is I would buy these two coins or just hodl if I had some extra cash. But I would maybe lean more into Tether because Tether is more transparent, as in I can easily evaluate exactly how much money they have in each risky investment, and so yeah, I can also calculate um, how much money um, they need to leave out to not get liquidated, let's say, or like a bank that they just fall when everybody starts claiming their cash. Well, USDC, yeah, I already know they have 100% cash and cash equivalents. Of course, these are, of course, very safe, but it would be, yeah, it would be better if they would be more transparent and maybe say approximately 10% was in treasury bills or commercial paper, and yeah, this of course helps their comment about the 90-day maturity, of course, but I already know that if everyone, of course, claimed it after 1 day of purchase, then there could be some problems. But yeah, and Paxos, BUSD, of course, it would be much better if they would be more transparent or more would explain exactly what everything is said of these things. Why can they just say something like cash and cash equivalent, treasury bills, etc.? So yeah, I don't think everybody's just holding cash. Everybody's investing their cash in some kind of investing vehicle. It would be very stupid just to hold cash. Let's assume you get $1 million and you need to pay it back tomorrow. It would be very stupid just to hold it and do nothing with it. You can easily go to any investment bank, or not investment bank, just let's say an interest savings account, crypto savings account, and you can just leave it for a day and earn some interest. And yeah, free money. So yeah, I hope I got my point across. If you have any questions, please leave a comment below, and have a nice day. Bye.